How's everybody doing? All right. If you can hear me, please type yes on the chat. You can hear me, please type yes on the chat. All right, I can hear myself. I'm just going to invite everybody here. We will be starting about 3 minutes. Mm, all right. How are you, Antonius? Mm, ahem, okay. All right. So we will give everybody about 2 minutes so they can join us, and we will be starting. Hey, Jacob. Alan, how are you, mate? Everybody. Mm, all right. Let's have a look at what we are going to be looking at. Yes, Marco, it is. Hi, Hussein. Hi, Annie. Good afternoon, Lee. I'm fine, thank you. All right, all right. So, pretty heavy day, news-wise, right? Pretty heavy day, news-wise. Hi, Marty, from Scotland. Sadly, I cannot do a Scottish accent. All right, so, uh, hi, Hussein. I'm gonna give everybody about 2 minutes before I start, so everybody can join me. Hi, mate. How are you, Tim? So everybody can join us actually, and then we will be starting. What happened with GBP, Japanese yen? Well, what happened is that we got taken out. I'm gonna go through that trade actually. I'm gonna go through that trade because I want to explain to you my thought process on that buy, right? Um, when I start, right? So from Kuwait, who's saying hi, Daryl, how are you? Abdi Khani, I'm sorry if I butcher your name, mate. But hi, Ali G, the real Ali G. Yeah, sure, I can do the Aussie Kiwi, of course. So why don't we start by yeah, Annie. I'm gonna go through that trade actually. Okay. You're talking about the pound yen, right? So yeah, I'm gonna go through that trade. How are you, Marcus? How are you, Arthur? I don't know. On GBP USD, yeah. All right. So let's start by looking at what happened, right? So we had the monetary policy statement and the interest rate decision by the ECB. And yeah, let me just grab the VIP group right, hold on, right here. And without the emojis, right? So let's see. Yeah, the ECB interest rate decision was to leave the interest rate at zero, right? The Eurozone ECB marginal lending facility, the deposit facility, etc. What's important to see here on the monetary policy statement is this: the ECB will continue to conduct net asset purchases under pandemic emergency purchase with a total envelope of that's 1.8 trillion euros, right? So they're going to keep on buying debt at a monthly pace of 20 billion euros. So basically the ECB gave no signal of tapering down this round of quantitative easing still, right? Um, and what was weird about it is that the euro had little to no reaction to that news, right? Had little to no reaction to that news. But then, an hour later, we had the inflation data from the U.S. Right here, you can see it. The core CPI. Let me see. What's important here is the year-over-year CPI from the U.S. was higher than expected and higher than the previous reading. And the U.S. core CPI month over month was lower than expected, but way higher than the previous reading, right? Then U.S. Fed Fund futures. No, that's not important. So basically, let's have a look at it here. We had a beat on CPI, but a miss on employment numbers, right? So the unemployment claims increased by 376,000 from last week, which it's kind of a mix, data from the U.S. But and looking at the DXY had little to no reaction too. If you can see here, this is where we were looking at those at that data dump. But the big winner was the pound. The pound had a big surge from the lows on the pound versus the U.S. dollar and versus the yen, right? So that was very unexpected. I mean, I wasn't expecting such a strong move on the pound on inflation data from the U.S. and the yen starting to sell off too. So that's why the GBP yen had this big rally. It's about 100 pips, I think, from low to high. Yeah, 108 pips from low to high because the pound started to get beat up, and the yen started to sell off, which both have a bullish reaction on the pound versus the yen, right? So let's talk about the pound yen because we had a trade yesterday that it got stopped out at a loss, right? This is what I was looking at, and hold on. Let me just put this here. This is what I was looking at, right? A flat correction and a retest of the not last week's highs, but the previous week's highs. So very big key level that we saw buyers jumped in a couple of times in the past. And it was also in confluence with the 113, I think. Let's have a look. Yeah, with the 113 of the AB wave, right? So I was thinking that this might be a flat correction on the pound versus the yen. Eventually, we got stopped out, and the pound now rallied at the retest of the overall structure, making it a true ABC move, right? A true ABC correction to the 161.8 and to these previous highs, which, in my opinion, I mean, they were not strong as this week's highs. Oh, you were short the pound yen? Yeah, that's the thing, Annie. That's the thing. That's something that I don't do, right? For example, I mean, just by looking at this chart, what I want to do is to get long, to be a buyer. Why? Because the impulsive moves are to the upside, and the corrective moves are to the downside, right? You don't want to be shorting such a strong market because this is a super strong market, and you don't want to be shorting neither on pullbacks, which by definition are choppy, right? What we wanted to do is get in on this bullish market, with the direction of the market. But we timed it a little bit too early, right? And we were not going to put our stop losses below these lows because, frankly, we're not swing trading, and the risk to reward ratio would be super off in that scenario. And today, I saw the test of the 154 and the test of the overall structure, right? But to be completely honest, there was no setup, really no setup to go long, and I wasn't go long. We were not going to get into a what at the moment was a speculative entry because there was no setup on such a heavy data dump day. So that's the GBP yen. Let's have a look at the US dollar because the DXY really. Okay, this is the thing about the DXY, right? On such heavy data dump days, we are going to have a little bit of a chop. And if you notice here, since the release of the inflation data and the release of the ECB monetary policy, we have been, trading in a super choppy range, right? So to be completely honest, if the DXY breaks with today's highs, which are at the 98.28 level, yeah, the probability of a positive day, a bullish day on the US dollar is frankly very high, right? Which will help to our US dollar Japanese yen longs, which at the moment are flying. That's awesome. So, fundamentally speaking, I continue to be bearish on the USD because we are still inside of a big round of quantitative easing, right? But the probabilities of a rate hike are higher and higher, which means that because of the high inflation, right, in the United States, so central banks fight inflation by rising interest rates. And right now, the interest rate on the United States is close to zero. And if we get a rate hike on the next meeting, we are going to see a breakout of this structure that we've been trading in, right? We might actually see a breakout of the 90.80 level, right? And even and it could go even higher, even though that a rate hike would be noise, in my opinion, at this time, in the sense that if we get a rate hike, it's going to be bullish for the for the U.S. dollar, but in my opinion, on the very short term, because this big round of QE and all the money that has been printed, it's still heavyweight. It still weighs heavily on the U.S. dollar. All right. Um, let's see if we have any questions. All right. Daryl, plotted your analysis from your daily update. Great learning curve. All right. So Annie, to continue with your GBP yen, right? I mean, just a piece of advice: try not to. I mean, always look at the overall direction of the market, and try to get in on the direction of the market because I mean, wouldn't you want to make a fast profit rather than holding a choppy pullback in this case? No. Right, let's have a look at metals. Yeah, let's have a look at metals. Um, let's start by looking at the 4-hour chart in gold. So on today's daily watch list, I was telling you that to me this market is right now non-directional, right? In the sense that we have been on the same range for about a month, right? And I was waiting for a pullback to at least these lows to look for buys, and really my power buy zone would have to be these previous broken highs. But with the reaction on today's inflation data, uh, and this 4-hour candle, this is a super bullish 4-hour candle, right? Yeah, this is a super bullish 4-hour candle. I'm still not looking for buys. Why? Because to be completely honest, and I'm going to explain to you this on the 1-hour chart, right? So, to be completely honest, for me to go long on gold, I mean, a price would have to break with yesterday's highs, right? And because we've had so much selling pressure around the 1910 to 1915 level, the risk to reward ratio on this trade is completely and utterly off, right? So what I'm going to do is simply, and I'm going to show you this on the daily chart. What I'm going to do is simply wait for a break of these highs, right? And wait for the retest in order to get an amazing risk to reward ratio to the retest of the 153. That's my plan in gold. And let's have a look at the US dollar because I see that the US, what's going on with the US dollar Japanese yen? Right, the US dollar is rallying. Let's have a look at yen futures. Right. So the US dollar is rallying and the Japanese yen futures are selling off. So the current move on the US dollar Japanese yen does not make sense, right? This does not make sense at all. We're going to keep on with the trade as is. We already moved our stops higher. We had the reason we moved our stops higher was because if a price were to break today's lows, which it didn't, we didn't want to be on that long position anymore. Okay, that was the whole rationale of us moving stops and cutting our initial risk by 1/3. But again, this sell-off on the U.S. dollar Japanese yen does not make sense at all. We're going to keep on that position, right? Now, so let's have a look at silver. Again, silver, same story, but silver is quite different. In the sense that we do have these highs right here, right? The top of the range. Again, as you can see, this is where today silver start to sell off. And if we get a break and a retest of these highs, we could in fact get in um, on a nice long position in silver. But for the time being, we're not going to be touching metals until we get some direction in this market, right? Um, uh, let's have a look at what you want me to look at. Someone asked me to look at the CAD US dollar. The CAD US dollar? Well, I'm going to show you the US dollar CAD. Right, so the USD CAD, if you follow my daily watch list and my daily updates, I have been for the past 2 months or a month and a half, I have been telling you that to me this range or the US dollar CAD is untradeable, and I wasn't going to short, even though this market is heavily shorted, right? I wasn't going to look for shorts at these lows. Why? Because we are in a very strong area of support, a key level, right? Just look at the weekly right here. This is super strong. Uh, that's why I was not going to look for shorts at these levels. But what I was looking for was a rally to the 123 to 123.50 right here to really look for big shorts, right? Because of the risk to reward here. And if price rallies to, I mean, we are in a buy, we are waiting for that buy position to get triggered, right? And if price rallies to this level, this is where I will be looking for long-term or mid-term shorts in the USD CAD. It all depends on how strong sellers on the CAD are at the moment. And I was talking to Olympia about this. The reaction to the inflation data on the United States on the US dollar CAD was really mild. Um, if we measure the high to the low of the move, we're just talking about a 40 pip move, right? Was really mild. Nothing like the pound, right? Or nothing like gold. So, this leads me to believe that there is a lot of Canadian dollar sellers position here. So, the higher probability trade in this case is to the upside on a break of that range that I was showing you. So, does that make any sense to you? Right. Okay. So, at the moment, the markets that I'm watching, of course, the pound versus the yen, the US dollar Swiss franc. This is a market that I really don't trade at all. The Euro USD, right? This is interesting actually. The When I started my session today, I was looking for longs on the Euro US dollar, right? Let me show you why actually. So the Euro, even though the Euro USD is short-term non-directional, we are in a very strong uh, bullish move, right? And on the daily, this really looks like a flag. So I was looking for longs to position myself for a possible breakout of the 122.50, right, or so. And this is the level that I was watching, right? These previous lows, or well, these are today's lows, or this base right here, which of course you can pull it all the way to this broken level. So this is the actual level that I was looking at, the 121.60 or so. But because it was ECB day and we had the inflation data out of the US, I wasn't going to get in on a buy position on the euro because that was going to be super speculative. But now that we've had the data dump, I'm still looking for buys, even though this market does not look very bullish at the moment. It doesn't look very bullish at the moment. I'm still looking for buys. For and if we get a dip to the 120 or so, this is where I'm going to look for buys. And if price rallies from here, well, this is going to be a move that I am not going to be involved in. But definitely looking for that possible move, possible scenario. The other one that I was looking at was the US dollar versus the Mexican peso. And, well, I didn't take it, right? So this wasn't my idea. Let me just delete this. Why I was looking at the US dollar Mexican peso and why I'm still looking at this market, right? Even though that this market is heavily influenced by the US dollar, right? Because the US dollar is so much stronger than the Mexican peso. Just by looking at technicals, and just by looking at my key levels, the 1960 is where we saw a ton of buyers jump in, right? So the last time that we were trading at these levels, price rallied about 10.65% or 20,000 pips. I mean, 20,000 pips sounds like a lot, but this is the US dollar Mexican peso. I mean, you can say that these were 2,000 pips, okay? And I'm still looking for buys here. I'm still looking for buys. Maybe today is not the day, but definitely looking for buys. What concerns me a little bit is this, on the daily, right? On the daily, we are trapped inside of a range. The range is that key level that I showed you from January, right? And the previous broken base, right? So basically, the way that I see it, okay, yeah, we had, yesterday's candle was a dodgy. That doesn't say anything. But what I'm looking at right now is this. Of course, we are having a lot of selling pressure because it's the retest of the previous broken base, and a lot of buying pressure from technicals on that heavy key level. So if we go to the lower time frames for our chart or so, you can see that what we were looking at on what was the level on the daily? Let me see, 1978, right? So 1978, 1980, all right. Let's call it 1980 or so. That's it. So we're having a ton of selling pressure right here. I'm still looking for buys, like I told you, but to be completely honest, right now a buy on the USD Mexican peso would be quite speculative, in my opinion, right? And not only that, but the probability of success of a buy below the previous broken base is super low. So what I'm going to do is I'm going to wait to see if price rallies, right, and retests this level, the 1975, to look for longs, right, because the risk to reward of this trade would be awesome. Something like this, of course. Stops would have to be at the lows of the move, but we could be looking at a nice 1 to 2 just to first targets. USD CAD, I just went through USD CAD, Marcus, right? Were you not here? But yeah, what I said is that I know I was talking about the US. I already did the US dollar Canadian dollar too. So yeah, let's have a look at Bitcoin. I know you guys like to look at cryptocurrencies, and the reason that I'm looking at Bitcoin is because I find it quite interesting, and and this is exactly what I was looking or waiting for, right? Let's have a look at the 4-hour chart. First of all, we were trading inside of a midterm, right? Bearish structure, right? Um, and today I saw a price stabilizing above the previous broken base, right? So that to me is a clear bear trap. Not only that, but if we go to the hourly, right? If we go to the hourly, I saw that price was printing a bullish flag right at the retest of that bearish structure. So I positioned myself on a buy in this case. Why did I do that? Well, because a break of this flag would mean that a possible break of the overall bearish structure is in play. And I mean, I'm not saying that this is a new bull market in Bitcoin. No, not at all. I'm just looking for a retest of these previous lows as a big first target, and then maybe letting the rest of it ride for a retest of this massive base, right? To me, cryptos are still not a big buy, but this is what I was. Yeah, this is Jesus. Hold on. Hold on. All right, so no, we're good. So yeah, this is what I was waiting for and looking for in Bitcoin. You know, Ethereum is not the same story, but the thing about this is that this breakout. Well, I thought that this breakout would, would have been a lot stronger than this, but I'm still keeping on those buys, um, but I'm monitoring them. And frankly, if price comes back inside the structure and breaks with these lows, I'm gonna be out. Let's have a look if we have any questions. Aussie NCD. All right. You know, this is a market that I don't trade. I don't even have it here, I think. Yeah, I don't even have it on my watch list. Okay, let's have a look. All right. The daily. Wow. Let's have a look at the daily here. Oh boy. I mean, yeah, this sucks. I know what I mean. I'm gonna tell you why I don't trade this market. This market sucks. I mean, it really does suck. You know, it's super choppy. You know, it's super choppy, and well, even when the market is trending, right? Just look at these weeks on the daily, right? I mean, holding on to a position is quite hard, you know, because of how non-directional on the short term it is, even when it's trending on the longer term. Having said that, this is a massive level, the 0780, right? I wouldn't. I mean, if I were to look at this, if I were to look for entries here, hold on. Yeah, if I were to look for entries here, it would be shorts, right? But price hasn't gotten quite there yet. You know, just look at these weeks. You know, if you get short here, uh, you have to put your stop losses below. I'm sorry, above these highs, definitely, because if you don't, you're going to get stopped out on a real retest of the 108 level. Now let's have a look at the 4-hour chart. Ugh, this sucks. I hate this market. You know, just look at. Just look at this uptrend. You know, we have a big move, then bam, then a lot of chopness, and yeah, it's directional, but it's quite hard to hold on a trade for a week just to make 140 pips. I mean, there's more. There's better markets to put your money at risk. Aussie CAD. Okay. I don't have it here either. I mean, I don't trade the Aussie dollar, you guys. I don't trade the Aussie dollar, but I'll have a look at it for you. Just give me 1 second. Uh-huh. But first, someone asked about the Swiss franc versus the Japanese yen. Another market that I don't trade. But let's have a look. Right? Wow. Super bullish, you know. Um, of course. I mean, just by looking at that chart. Yeah, let's have a look at the daily. Let's see if, or the weekly. Let's see if we have some interesting levels that we are about to test or retest or so. So, I mean, this is quite interesting, right? We broke out of the 117.60, 117.50, and again, what is this? This is a flat triangle. Well, this is a continuation pattern on the weekly, of course. And right now, let's see, we already broke these lows. So the next key level that I see, that I probably see this market retest would be the 123.22, right? Let's go back to the daily. We are just there, I wouldn't go long. I mean, just because one, I don't know, I don't trade this market, so I don't follow it. And two, I mean, we are really close to that key level on the daily, right? Um, I mean, you could make a point for a, breakout trade above the 122.60 with stops here for a continuation rally, but I don't know, I'm not too keen of trading these kind of markets. Aribazoye, Joshua, hi. Yeah, I just did, but yeah, I'll have a look at it later for you. So, what's going on with our trades? Uh-huh. The pound is really strong today. I like that. Bitcoin. Sorry, I'm just looking at my trades on my other screen. I have to monitor them while I'm live with you guys. So the euro yen, um, yeah, again, the euro yen is not a market that I would trade at the moment. Why? Because we are right here at the top of that structure and the 134, which is a super strong level uh, or the higher time frames, right? I mean, you can, I mean, I'll show you the level on the 2-day chart or so. Yeah, so this is the level that we are retesting at the moment, these highs. And even though we are in a very, very strong bullish market, I mean, it's not worth the risk for a possible breakout that we already saw that is going to take a lot of buying power. So, I mean, this is the way that I look at this. This is the way that I look at this. I mean, I try. 90% of my trades are with the direction of the market. I mean, it's quite simple. It's quite simple what I look for. I have my checklist of things that I look for in setups, and when a setup checks all of the points of my checklist, I mean, I take that trade blindly. Why? Because I know that if a setup checks all the all the all the bullets on my checklist, it has a very high probability of success, and I really don't care if that trade in particular stops me out at a loss. I would take it every day on a vacuum because I know that by taking that trade on a vacuum, I mean, in the long term, it will make money. You know, I mean, traders go through drawdowns, which is normal. 5-6% drawdown is not out of the ordinary if you know how to manage your risk. I'm not gonna do the pound. All right, I'll do the pound Swiss franc. No, I'm not gonna do that. I hate that. I don't trade those market. Yeah, I don't trade those markets. So it does. I mean, ask me something that I do trade. And you know what? I'm going to tell you something. Why are you looking at the pound versus the Swiss franc? Do you understand how that market moves? Do you understand what you are trading? In fact, are you trading the pound? Are you trading the Swiss franc? What brings power to that market? Do you understand what you're trading? No. So the thing about this is that when you're trading forex, you are not trading a currency pair. You're trading a currency, right? All 80% of my trades are U.S. dollar based. 15% are pound based, and those are the only two currencies that I trade, right? And what I do is I look at the pound futures, I look at the DXY, I look for the directional on the market, on the U.S. dollar, the direction on the Great Britain pound or the British pound or whatever, and then I look and then I go to my watch list here and look for markets and look for opportunities in every single market that is going to yield the best risk to reward on the idea that I have on a single currency. For example, right now, if we look at the DXY, I'm not telling you that this is what we're going to do, but okay, cool. The first thing that I do is I go to my chart and I look at the DXY. So, oh my God, I see that big rejection of that key level that I saw. We're trading below the weekly pivot. We printed new daily lows. So I'm going to look for shorts in the US dollar. And look at the 4-hour chart. I mean, Jesus. And after doing that, I go right. If I'm looking for shorts on the US dollar, I might want to buy the euro versus the US dollar. Now, I really don't like that risk to reward. I might want to buy gold. Why? Because I'm looking for shorts in the US dollar. That's what you need to do. What are you doing trading the pound versus the Swiss franc, right? If you only trade technicals, I guess it's fine, but this is a lot more than just trading technicals, man. So you need to be careful, and you need to. And the reason that I'm telling you this, guys, is because you need to realize that trading forex. It's not just going to the euro US dollar chart or to the pound Swiss franc chart, and look for setups. No, why would you do that? What moves that market? And that's the reason that I don't trade agriculturals, because I don't understand those markets. I don't understand how those market moves. What makes those market moves, right? And the reason that I don't understand that is because I have never taken the time to learn that. And why would I? Because I'm already profitable on those two currencies. If you try to trade every single market that you can, and right now in this age and age, you can do that with an MT4. But what's going to happen is that instead of optimizing, your trading and focusing on two markets, backtesting the shit out of your setups on those two markets, understanding exactly the maths and the probabilities behind your setups on those two markets. That's the way you make money here. Why? Because if you are looking to trade today, if you're looking to trade today crude oil, tomorrow corn, coffee futures, Jesus, the Aussie versus the New Zealand dollar. What would you trade that? The reason that the Aussie versus the New Zealand dollar is super choppy is because those two currencies are very similar to each other. So, and what you're going to end up doing is you're going to be hurting your long-term profitability. Why? Because you are going to burn money on markets that you don't understand instead of focusing on two markets that you can exploit. Right. So Annie, I can explain GBP future. Sure. Let me just have a look at on my charts. All right. So Bitcoin, you know, uh, still very much valid. You know, the setup that I told you, it really makes sense to me. So yeah, pound futures. You know, to look at the U.S. dollar, I look at the DXY. You know, of course, the U.S. dollar currency index. There is a Great Britain or a British pound. I don't know why I'm saying Great British pound. There is a British pound index, you know. But when it comes to the pound and the yen, which are the two other currencies that I focus on, I look at futures, right? And the ticker for the Japanese yen futures is 6J, and the ticker for the pound futures is 6B, right? And it's basically the same, mate. You know, it's basically the same, right? As looking at the Aussie CAD, no, mate, I'm not gonna look at that. Um, yeah, it's basically the same as looking at the DXY. You know, I'm looking for direction on a single currency, and um, for example, here, let me show you the 4-hour chart on pound futures, and this is the reason that I'm still holding on my buys on the pound, right? Because I want to get, I want to get in on long on this super bullish market. And the cool thing about this is that you can look at the volume, right? Where is it? Fixed range. So let's have a look at the volume profile on um, uh, the the pound futures, right? So right now, again, we are testing the point of control in the pound futures, right? The point of control is that I'm going to change the color on this line. Just give me a sec. I'll make it pink. Love pink. So yeah, the point of control. Basically, what this instrument or what this histogram tells you is the zones of high volume traded in the past, and I'm looking at the entire volume of the pound futures of that range. Why I'm looking at that? Because I am looking at well, I was looking at buying opportunities, right? For example, right now, and you know, we hold on, let me just grab the range, right? So yeah, right now we are testing a very high volume area. You know, the point of control and the high volume zones are going to be where big traders or, you know, algos are going to be placed at. All right. Let's have a look at the hourly on the pound futures, and let's focus on the last week of trading, and let's see if we have the same point of control or do we have some high volume being traded at the lows. Right. Let's see. So basically, on the last week of trading, I don't know why this is always white, right? On the last week of trading, same story, you know, high volume is being traded in the middle, but right now, this is what I like. So let's have a look at the 50-minute chart on the pound futures, because this is a very nice. So, hold on. Yeah, so basically what has happened here is that, buyers starting to pick up price from the lows, and price got rejected by the point of control, as you can see on the 50-minute chart. But right now it's stabilizing above that, above the point of control. You know, when price is trading below the point of control, normally what we are going to find are sellers right at the point of control. That's why we get those rejections. When price is trading above the point of control, what we're going to find if price drops to the point of control is buyers, right? So right now, we got the first rally to that point of control, the rejection, you know, the previous highs, you know, supported price, and now price is stabilizing above that point of control. This doesn't mean much right now, but as you can see, we're starting to see some buying pressure above that point of control. Yeah, I mean, I don't know why I was telling you this, but I mean, looking at pound futures and yen futures, um, it's the same as looking at the DXY for the US dollar, right? Um, yeah, I mean, I'm just looking for setups. For example, um, the retest of the lows here, even I mean the retest of the lows here. Uh, was a good opportunity for buys on the pound. And of course, I mean, the pound futures is basically the same as the GBP USD. Let's have a look at our trade. Well, our US dollar, Japanese yen is kind of reversing on us. Let's have a look at the US dollar Japanese yen. Yeah, I mean, we have one third of our original risk. Um, I wouldn't close the trade right now at this level. If price breaks with today's lows, we are going to be taken out on a small loss. Let's have a look at the DXY, and yeah, and the reason the reason that we manage the trades the way that we do. Um, and sometimes we let price hit stop losses is because of the math behind the trade management tool. For example, that GBP yen trade that we had, right, was a very high probability trade, and by reacting to a reversal in price and cutting that trade short on a loss. Um, we would have killed the probability, the long-term profitability of that setup. Why? Because this setup, the one that I sent you yesterday on the pound yen, has a I don't remember exactly, but I think it's a 78.6% probability of success, right? So by cutting and also uh, uh, I think about 40% of the time we are going to see a pullback before the continuation. So by cutting the trade short on that pullback, I would be in fact killing 40% of the profitable trades that I could have on that setup, which means that I would make this trade unprofitable in the long term. It's all about the math. I mean, that's the way that I trade. If it makes sense to you, cool. If not, I can explain it to you, but not right now. So, you have any more questions, or am I free to go? I mean, this is only. I mean, if you have any questions about the VIP group, or anything at all, mate, this is the time. And again, I'm more than happy to go through charts with you, but it really. I mean, I think that I would be making you a disservice by going through markets that I don't trade. You know, um, and yeah, I mean, I could look at levels for you, but that's about it. That's about it. Yeah, Saskia, just email support, and they will give you all the information you need for the managed accounts. Yeah, I mean, also, I would like to hear how you feel about the VIP group, the signals, how we manage trades, the information that you get from us on a daily basis. It's important to have your feedback on that. It's really important to have your feedback on that because that's how we can improve our services. So yeah, I'll give you a few minutes if you want to share. Yeah, we can look at actually we can look at U.S. equities. Why don't we do that? Let's have a look at the Nasdaq. The Nasdaq is the one that I was looking at, and I mean, if you remember today's daily watch list, I was talking about this level on the Nasdaq, right? That below this level, I was looking for shorts. But once price stabilized above the 13,700, I was looking for buys. Again, there was no setup here. All right. Yeah, I have questions from Zik. I'll answer that in a jiffy, right? Yeah, there was no actual setup to go long on the Nasdaq. And to be completely honest, I wasn't even looking at that chart. Today, I was focusing on the pound because I do have some big buys on the pound, and I was focusing on our signals and also Bitcoin. But yeah, I mean, there could have been a big missed opportunity right here to buy the Nasdaq uh, on that fake out, you know. But again, I mean, levels, trade structure, trade direction. I mean, it's not that complicated, you know. Just look at the historic price action, find your key levels, wait for price to hit your key levels, and pull the trigger. Right, so I have a question about what? Uh, will the Euro NZD come down? I don't know. Let's have a look. I mean, what kind of a question is that? I don't know. No one knows. I don't fucking know. I mean, that's not a. I mean, that's not a good question, mate. You're doing. Thank you, NJ Fitness. So, what does looking at the DXY GBP helps in trading? Yeah, no, I got like I can't. I mean, I can't. I'm gonna get in trouble. I can't put out my crystal ball. So, all right. So, Zik, good question. Good question. The DXY is the US dollar currency. Shit, hold on. Okay. The DXY, the DXY, you know what I mean, right, Lee? The DXY is the US dollar currency index, right? This is a basket of currency pair, the of currency pairs, US dollar base, right? So it gives you a gauge on the direction of the US dollar. It gives you a gauge on the direction of the US dollar. So basically, when you're looking at the DXY, you're looking at basically the US dollar. And for example, today, right, on the example that I said, uh, just by looking at price action today, I would be looking for sales in the US dollar. That's the first thing you need to do. You need to look for setups in one single currency. That's why I also look at pound futures, yen futures, etc. Then, when you have a trade idea, in this case going short on the US dollar, then you go to your currency pairs, right? Because we want to go short on the US dollar, we might look for buys in the Euro USD. We might look for sales in the US dollar, Canadian dollar. We might look for buys in metals, you know. That's how you need to look at that, at the market. Yeah, I'm gonna practice my Scottish accent. Hold on, let me see if I can do it. Shit. No, I can't. I'll practice it. And all right. Shit. All right, Anthony. Let me have a look at the Euro NZD. Uh, a W. Hold on. Is that a reversal W pattern on the 4-hour chart? I don't know what you mean by W pattern reversal. You, are you talking about these two highs? You know what? W pattern. This this is an M pattern. W would be from the lows, right? But I mean, I don't know, man. Who knows? You know, I don't know. Yeah, I mean, I don't fucking know, really. But let's look at some levels, right? Cool. So yeah, you want to go short here, right? Let's have a look at, and this is just technicals. I don't know. I mean, I don't trade the Kiwi. Right. So let's have a look at the daily. Yeah, I mean, we are in a heavy sell zone. Again, we are in a heavy sell zone. Yeah, what concerns me a little bit about a possible sell here, just looking at technicals, man, is that buyers are jumping in higher and higher. What? This creates a flat triangle. But again, a flat triangle is a continuation pattern. I'm sorry, this was a mistake. I'm sorry. This was a mistake. This is not a flat triangle because a flat triangle is a continuation pattern, and this is, I mean, and uh, if this were a flat triangle, we would have. I mean, we need to be in a bullish structure. So my bad. Yes, it looks very bearish. Let's look at the 4-hour chart now. The 4-hour chart. Yeah. So, how wide is this range? So that's 200 pip wide. To be completely honest, I would like to see a break of of this previous base, previous lows, the weekly pivot, and a real retest in order to me, in order to look for shorts here. Also, you need to consider that we are in a midterm bullish structure, like this, something like this, right? I don't know. Let's just look at the bottom of the structure. We are in a midterm bullish structure, right? So the thing about this is that even if we break with these lows, we might get a reversal for a continuation. Going short in a, of course, in a bullish structure, it's quite tricky, and I don't do it often, but I need to see a breakout of the current structure in order to go short. Even though we are seeing some good, um, some good bearish. Hold on, I'm sorry. I need to figure out something with my trades. All right, this is fine. Wow, this is more than fine. This is amazing. Um, the USD Japanese yen. Yeah, hold that. And yeah, that too. So I'm fine. So you see, let's look at the hourly here, right? Let's look at the hourly. Very thick zone again. Let's just put that line. Where is it? Around these levels, right? I mean, even I mean, I mean, even with this strong move to the downside, I would, to be completely honest, I would be looking for buys, right? Because I trade the direction of the market, and this is very short term, right? We were looking at the 1 hour, but again, just look at historic price action, all right? Here is where sellers were positioned, right? Then, bam, big buyers jumped in, and then price stabilized at this level, and again, buyers jumped in. So this could be another retest before going higher and finally breaking with these highs. You're looking at shorts, I will be looking at longs. Would gold be a short today? No. Yeah, Lee, goodbye. I'll see you around, mate. So, yeah, gold. Oh, I mean, let me just. Cool. So, gold. The US dollar is crashing at the moment, right? This is what happens, on heavy data days. I mean, it's it's really impossible to trade the data release, right? You need to wait for price to stabilize after all the noise, and finally you're going to get direction. In this case, we're getting some bearish direction, of course, on the very short term. that is going, yeah, to be bullish for metals. But I mean, I don't see a setup to buy gold. Where would you put your stop losses here? Yeah, for instance, if you decide to go long here, where would you put your stop losses? To me, stop losses would have to be below the low of the move, and because we have such a bad risk to reward ratio, you know, this move is already gone, and I don't trade FOMO. I mean, if I don't catch a move, I don't catch a move. Fuck it, I'll catch the next one. Maybe, maybe after we break, we will get a retest of the 188 to look for longs. Who knows? But yeah, keep an eye on that. And I wouldn't. I mean, someone asked if gold was a short. I mean, I wouldn't short metals today. And yeah, all right. I'll finish up by looking at the U.S. dollar, Singapore dollar path. This oscillator on the downside, yeah, that's I had it made, mate. That's all me. I haven't looked at this chart for a while. The U.S. dollar, Singapore dollar. I mean, this is another market that I like to trade. And of course, it's right now it's super bearish. I was looking for buys on the rejection of these previous lows. It didn't. I mean, it worked out for a day, but then I got stopped out. Uh, but hola. But yeah, looking at the hourly, let's look at the forward chart. I mean, to me, I mean, this market is bearish, but we are so low in the move that we have a very very thick area right here, very strong support. Uh, Again, this is just like the U.S. dollar, Canadian dollar, right? Actually, I missed that. Jesus, I missed this opportunity to sell the U.S. dollar, Singapore dollar at the retest of the 3280, but that's fine. I wasn't looking at that chart. Yeah, it's bearish, but to me, there's no setup to do anything. The average daily range or the weekly range? No, not especially because I don't day trade, right? I don't day trade. I do look at the week. I mean, at the previous week's ranges. For example, this is for our chart. These dots at the top and at the bottom of my chart are the previous week's highs and the previous week's lows. So yeah, I mean, to answer your questions, yes, I don't use the average daily range or the average weekly range per se, but I do have a tiny gauge of the last 4 weeks and the last 7 days of trading ranges, just as a visual. Yeah, just as a visual. But it's very important, to understand how much does a market move in order to trade it. All right. So if you don't have any questions, yeah, the U.S. dollar, Japanese yen is in the red. That's fine. Uh, yeah, the U.S. dollar, Japanese yen got stopped out. That's fine. I mean, that's why we moved I mean, we moved stop losses to below the today's lows, and we ended up. I mean, we cut our risk by one third, by two thirds, right? So we ended up losing one third, which is fine. That was a play, That was a play. All right. So if you don't have any questions, thank you for joining me, and yeah. Anything that you want to ask, you can always email support, and I'll try to respond. But I'm not going to respond to queries about me looking at charts. Right? So thank you, and you're welcome. Yep. Thank you, mate. Have a great day. Trade safe. Always focus on risk management, and that's the key. It really doesn't matter if we lose two, three trades. If you focus on risk management, the math behind the signals is there. On the long term, you are going to be profitable. But if you do not use correct risk management, there is no way you are going to be profitable. You know, right? So that's another piece of advice. And all right, thank you. Cheers.